Hello and a warm welcome to today's Sydney Direct. I'm Natalie MacDonald. Now, markets may be winding down for the Christmas period, but we've still got plenty coming up for you. My guest on today's show is Henry Jennings of BBY Ltd. We're going to be doing a stock market rundown for 2014 and what we can expect from the coming year. Henry, thank you so much for joining us for this Christmas special of Sydney Direct.
Always a pleasure. Thanks, Natalie.
No problem at all. Okay, so we're talking Australian stocks, and the big banks could be finishing the year on a bit of a rally following the Murray inquiry. But it's fair to say it's been a bit of a mixed bag for the Big Four.
It has. I mean, the Murray inquiry has been long awaited, and we had it out on Sunday, and the general view seems to be that it could have been a lot worse. And of course, this is only a recommendation that's going to government. They're going to take 6 months to think about it, and then it's up to APRA, which is the regulatory body of the banking the Big Four banks and the other banks, to actually implement their recommendations if they choose to. Of course, they might water it down. The government might water it down. So we have a long way to go. Yesterday was the first day of trading after the Murray inquiry hit the press, and to be honest, the banks actually breathed a massive sigh of relief, and investors seem to be quite positive about the whole thing. So we'll wait and see what happens, but there's a long road to go, I think.
So a possible Merry Christmas for the banks, but not so much so for REM and Meyer, who it has been reported are going to be removed from the ASX list and make way for two fresher companies, as it were. Is this important, do you think, for overall ASX performance?
Well, it's not so much overall ASX performance, but it can have a very big bearing on the companies that are removed and added to the indexes. I mean, we tend to get some notice, so it doesn't come as a big surprise, but REM and Meyer both have had pretty shocking years. REM is an iron ore producer, so they really have struggled, and they're one of the fringe players, I guess. So the stock was sort of $1.40, now it's 17-18 cents. So it's been pretty horrible. Along the way, they've had capital raisings. Meyer's had some issues as well in terms of retail sales. So not good news for those companies, because once they drop out of those indices, they tend to drop off people's radar, and it takes a long time before they can get back on again and get sort of the sins of the past atoned for.
So, Henry, if you had to pick a winner of 2014 almost, who would it be for you?
I've got to say, this is a stock I hate because I generally hate airline stocks, but QANTAS has been the surprise winner of 2014. Mainly on the back of the lower oil price, of course, which has been a big positive for all airline stocks. But there has been a bit of a re-weighting in the stock, and there also hasn't been too much bad news recently. But when we look at, we started the year with QANTAS around $1.09, and here we are around $2.40, $2.50. They have been an amazing winner. A lot of analysts are now suggesting that there's more to go, and who knows. But it has been, I guess, the surprise one, because I hate airlines, and I was asked many times on TV around the place, what do you think of QANTAS? And I always say I hate airlines, and there you go. The stock's gone up by over 200% this year.
Now, tech listings formed a huge part. They were kind of one of the success stories of 2014. Moving into 2015, though, do you still see tech or perhaps a different sector leading the pack?
I think we're still going to see tech listings, and we've seen a lot of backdoor listings as well, where a small tech company reverses into a listed shell, as we call it, which has got no business but may have some cash and some residual issues. We've seen a lot of those. I think we're going to see a continuation of that to occur. But I think what is going to be the biggest stories, I guess, of 2015 is going to be the Aussie dollar. I suspect we're going to see interest rate cuts in Australia. We're going to see interest rate rises in America. We will see the Aussie dollar under pressure, and those companies that earn US dollars rather than Australian dollars are going to do very well. So the exporters can pick up in that respect, especially the resource stocks, and they've been hit hard in the commodity prices. But we should see things like Amcor, the Brambles, even again QANTAS doing very well. Domestic tourism will do quite well. So I think it's going to be 2015 will be a story of currency and interest rates as these two kind of wage war around the globe as everyone tries to get their currencies down, and lower interest rates continue for some time to come, except maybe in the US.
Henry, thank you so much.
Pleasure. Happy Christmas.
Henry Jennings there, seeing out the old year and bringing in the new year. Do stay tuned, I've got plenty more coming up for you, but for now, it's goodbye.